AMD just ripped almost 300% in the past year. If you'd put $1,000 into this stock 5 years ago, you'd be sitting on over $4,000 today. So what's actually driving this insane move? Is this the real deal, or are we looking at a hype bubble waiting to pop? Let's break it all down, nice and simple. First things first, who is AMD and what do they actually do? AMD, or Advanced Micro Devices, is a semiconductor company. In plain English, they make the tiny chips that power your computers, gaming consoles, and increasingly the massive servers that run artificial intelligence. If you've ever built a gaming PC or used a PlayStation 5, you've already used AMD technology. For years, AMD was the scrappy underdog, always living in Intel's shadow. But under CEO Lisa Su, they've pulled off one of the greatest comeback stories in tech history. And now, they're not just competing, they're winning. All right, let's get into the 4 big reasons AMD stock is ripping right now. Reason number 1, the AI chip explosion. Look, every big tech company on the planet is racing to build AI data centers right now, and they all need chips to do it. AMD's Instinct MI300X accelerators are going head-to-head with Nvidia's products, and companies love having a second option. Think about it this way. If you're a giant company like Microsoft or Meta spending billions on AI, you don't want to rely on just one chip supplier. AMD is the alternative and demand is through the roof. Their AI-related revenue has been doubling year over year. Reason number 2, data center dominance. AMD's data center segment has become an absolute beast. This is where companies like Google, Amazon, and Meta buy server chips to run their cloud platforms and AI workloads. AMD's EPAC processors are taking serious market share from Intel in this space. To put this in perspective, AMD's data center revenue has gone from a rounding error a few years ago to the company's biggest moneymaker. We're talking billions of dollars every single quarter. That's not hype. That's real revenue hitting the books. Reason number 3, they're stealing Intel's lunch money. For decades, Intel was the king of PC and server chips, but AMD has been absolutely eating into Intel's market share. Intel has been stumbling with manufacturing delays, leadership changes, and billions in losses. Meanwhile, AMD keeps executing. It's like watching one boxer get tired in the ring while the other one just keeps throwing punches. AMD's Ryzen processors for PCs and laptops have been winning over consumers and businesses alike. Every percentage point of market share they grab is worth billions. Reason number 4, the forward PE tells a big story. Right now, AMD's trailing PE ratio is about 134. That sounds crazy expensive, right? But here's the thing, the forward PE is only about 32. That means Wall Street expects earnings to more than quadruple over the next year. That massive gap between trailing and forward PE is the market saying, we believe AMD's earnings are about to explode, and if they deliver, this stock could have a lot more room to run. Now, here's the number that really puts it all in perspective. AMD is up 307% over the last 5 years. $1,000 invested back then would now be worth over $4,065. That's not a savings account. That's a rocket ship. But hold on. Before you go all in, we need to talk about the risks, because there are some real ones. Risk number 1, this stock is volatile. AMD has a beta of nearly 2, which means it swings almost twice as hard as the overall market. And the max drawdown over the past 5 years, 65%. That means at one point, your $1,000 investment would have dropped to just $345. That's stomach churning. Risk number 2, Nvidia is still the gorilla in the room. AMD is the number 2 player in AI chips, and that's great. But Nvidia controls roughly 80% of the AI accelerator market. If Nvidia keeps innovating faster, AMD could get stuck in second place forever. And second place in tech doesn't always pay well. Risk number 3, valuation pressure. Even with the forward PE at 32, AMD is priced for perfection. If earnings disappoint even a little, or if AI spending slows down, this stock could sell off hard. Remember, the 52-week range goes from about $92 all the way up to $353. That's a massive spread. So here's the takeaway. AMD is ripping because they're right in the sweet spot of the biggest tech trend of our generation, artificial intelligence. They've got real products, real revenue growth, and they're taking share from Intel across the board. But this is a high volatility stock with a premium valuation, and Nvidia still dominates the AI chip market. Whether this stock keeps running or takes a breather depends on one thing. Can AMD deliver on those massive earnings expectations? That forward PE is a promise, and in the stock market, broken promises get punished fast. So do your homework, know your risk tolerance, and never invest money you can't afford to lose. If you found this helpful, smash that subscribe button and hit the bell so you never miss a breakdown like this. We do these every single week. Thanks for hanging out at the Compound Cafe. I'll see you in the next one. And remember, this is not financial advice. It's for educational purposes only. Always do your own research.